Good evening, everyone. Welcome to the weekly Masterminds webinar. It's Jeremy King hosting with Shaun Downey. We're going to spend about 30 minutes to 45 minutes tonight running through major global markets. So we'll look at currencies, gold, take stock of bond markets and have a look at what's been happening in the equity market. Shaun, welcome. Are you there?
Yep, I'm here. Hello, everyone.
So, Shaun's coming to us from the UK. Just a little bit about us. Shaun, can you just give us a quick background about yourself for anyone new?
Yeah, started in 1979, 16. Traded commodities first few years, American and LME metals. Did 2 years as head of FX, market making, spot forwards, weird things like Chilean pesos and all sorts of stuff. Moved into financials, 2 years trading bond markets, then Australia, head of treasury and trading for a company that owned Foster's Beer, Speedo Swimwear, Gestetner, amongst other things, doing convertible note stock option arbitrage and global interest rates and currencies. Went the other way after that, after the 87 crash, went into design, helped to design some major products for Reuters, and then 20 years teaching, mentoring, technical analysis, wrote a couple of books, of which one of them is the basis of what we do today. I've written technical commentaries, all sorts of things really, and traded private funds in a variety of guises and areas within that period. So pretty much traded everything. And today I look after private clients and trading safely, which is primarily equity based. So I spent 2.5 years working on a consultancy product which sort of looked at all the fundamentals of stocks, which was a very useful exercise and really got me understanding the workings of what generates stock markets and what makes them move. So that's my background.
Thanks, Shaun. And myself, I've also been a professional trader for 15 years. Not quite so many markets as Shaun, but I'm getting there. I'm catching up. Right now, I'm pretty heavily involved in energy markets in Australia. I'm also in software development working with Shaun, and I spend half my time in Sydney and half my time up around Newcastle. So anyway, what's in it for you guys tonight? Well, you stand to get a handle on where we think markets are going. So you can reflect on where you have your money and hopefully pick up on some of where the major trends are moving at the moment. Usually what we do in this webinar is just run through each of the major markets, and we update from week to week where we think, well, if there's been any trend changes to the major story that we repeat each week. So if you want to get involved with us, just go to our website, www.tradingsafely.com.au. Everything you need to know is in there, and you can reach out to us. We're happy to pick up the phone and have a chat to you about what we can do for you. Just before we go on, if everyone could just flick through this general information and disclaimer. Just while I do that, Shaun, what was your sort of key takeaway for the week?
Well, we for all intents and purposes, we finished earnings season. I know it still goes on for a few weeks, but from the point of view of the market, after about 2.5 weeks of all of that, the market gets bored senseless from it. And once Apple, Facebook, and Amazon are out of the way, which happened this week, then earnings season is really just about individual companies and whether we get signals or whether there is existing positions. So not much there. From now on, we've also had payroll out the way on Friday, which is first Friday of the month, biggest stat. So normally this means that the market is now ready to do what it wants to do. It's got all its information, as it were, for the time being. On those results, Google missed and went back below its final resistance. Had a I think it was a time continuation sell, and then followed through down the following day. Apple beat, sold more iPhones, and so that gapped higher considerably and then sort of stopped. And Amazon also sort of missed. Revenue was up, I think, but their guidance was a little bit poor. And so it initially went a little bit higher after hours and then fell sharply after hours. So we'll take a look at all three of those stocks and see what they look at. Elsewhere, the main takeaway was on the pound. We had been very bullish of it, and it's gone up considerably from that buy signal about 2 weeks or so ago or so. Had a sell signal on Thursday, which coincided with a buy signal on the FTSE, which is the UK market. So the FTSE is very strongly correlated with the pound against the dollar at the moment. That won't last forever, but it certainly is the way it's been pretty much since the vote in Brexit all the way back in the summer. So a sell on the pound equals a buy on the FTSE, which actually came in as well. And we had a signal on Shell. Their results came out Thursday morning. We've been itching to get signals on oil stocks for a while, and we finally got one. There was another one the week before, CVRR, which hasn't really done very well. It's drifted backwards, but the position's still valid. So that was the main takeaway. Bonds didn't really do a lot. They're still weak without really accelerating down. And we had what's called an inside week in the American equities, which I think you're going to show. So what's this chart associated to the pound? Yeah, so
yeah, that is the pound. I was just going to call up Shell. What was that? What's the code of Shell?
RDSA.XLON.
Just before we go on, it's probably worth explaining what we actually do. So what trading safely is about is we've created a program that effectively finds markets where we think that there's opportunity to buy or sell, and we've created a system that effectively identifies those opportunities, and amongst other things, it tells you where to enter, where to exit, and when to take profit, and when to exit because you're wrong. On top of that, we have quite a deep support network. In fact, if I just flick over to this trading safely, I can give you a bit of a look at. We have a online community where we actively post information on what global markets are doing, any new signals that have come up. For instance, here, I think Shaun's pointing out to a signal that we gave on Prudential Financial in London last week. He's on the chart there, he's identified the fact that there was a couple of profit-taking points. The next one under, there was a breakout on Disney that had a buy. One of our clients was on and had a profit-taking point through the week. So there's a very deep level of information underlying the product that we offer. So that's what we do. We're here to help, and our product is a software which enables people to buy and sell in various markets. And it's not just limited to stocks, although to date we've been focusing on equities. However, that doesn't mean that the same principles and the software can also be applied to FX and global futures markets. Well, left anything out on that, Shaun?
No, I think that's right. I mean, it's basically the professional client base uses different software and see a different picture. But all the studies, most of the studies that are in that professional software are also available here. But it's the system where we've taken something that's pretty complicated and deep and simplifies the visualization of it, so that all you've got to look for is triangles. And then if you see a number, which is a good example here on Shell. So there was a buy back in December, and then there've been a couple of exits, number 1 and number 2, and then we had another buy signal appear on Thursday. So that's basically what we're doing. People could go as deep as they wish. So some people we have just want to see that. They don't care about all the mechanics underneath. Whereas other people do want to know that, and there's no secrets here. It's we want people to understand it, and so if that's what they want to do, then we'll go as deep as they wish to go, and don't care how many times you ask the same question. That's very important.
Yeah, and that's why I just duplicated that tab and pulled up just the signals page. So for someone that wasn't really interested in why we do what we do, then this is for you. There's buy and there's sell signals, and there's levels that tell you when you're wrong, and there's levels that tell you when to take profit, and levels that tell you when to exit. However, we kind of encourage people to dig a little bit more deeply if they want to, just as Shaun touched on. And so if I come back to a chart like this, it's got a few lines there, and they're basically areas where the program assesses that there'll be buyers or sellers there. So they're the levels where we want to deal. So don't ever think that this is too complex, because we can flick back to this scenario where it's quite simple, or we can dig a lot deeper and analyze markets this way using more information. And on the Facebook site, that's where we do dig deeper from time to time. Okay, so just on Shell, so Shaun made the point that the pound was had a sell signal last week, and so when you get currency moves down, that sort of assists the equity market more broadly to makes the equity market cheaper from an international perspective, basically. And we've been bullish oil for a long time, and so Shell obviously broke out of this major monthly resistance up here and then back tested it. This is one of our favourite moves, where it breaks out, makes a new high, and then comes back and tests it. And then it's a great place to get involved. So we've got a buy there. Shaun, what do you think, Michelle?
Well, as long as the pound is under pressure, then I think that's going to work. I mean, oil is pretty quiet itself. One of the things in terms of sectors in the American market is oil and gas. One of the sectors, royalty trust, has actually gone to #1. Now, it's quite interesting, because a lot of the sectors, there's a lot of sectors within oil and gas. There's all exploration, production, pipelines, sorts of things. So it's split up into different areas, and they've actually been rallying pretty strongly without the oil price going up in any major way. It's really done pretty much nothing this year. Nat gas went up and then has come back down again. So for whatever reason, oil and gas is loved to a certain extent. A little bit frustrating for me, because I wanted to get involved in it a little bit more without the market knowing it. And that hasn't really happened, but keep on monitoring, see how we go. But that's really what I'm looking for. In terms of other sectors that have really made a move, just to explain for new people, I'm interested in what's fashionable and unfashionable. So by that, there's 197 sectors. I'm interested in the top 10, the bottom 10. Top 10 at some point become unfashionable, so I'm looking for opportunities to sell them. And the unloved ones, I'm looking for opportunities to buy. And for people who become clients, then I go through that in one-on-one sessions in as much detail as necessary, so that people understand exactly what I'm doing there. But the big mover really has been computer data storage, which is now up at #4. 6 months ago, it was 135. Banks are hanging in there. We've talked about banks before being one of the main beneficiaries when Trump was elected, and then they've really gone sideways for the last 6 weeks. Talked about banks' earnings, whether they were good or bad, what would happen, and the bank's earnings generally, as usual, were good, but the stocks didn't really go up because everybody's already long. And that's an example of something that becomes a crowded trade, as it were, and so there's no one left to buy. So I like to see things at the top for a bit of time, and then look for them to roll over. So computer data storage has jumped, so I'd expect it to stay loved for a while, but it's on my radar list. Semiconductors also were pretty strong last week. Things that are unloved, which I think are a little bit easier to trade because things tend to stay unloved for longer. And so what happens is the stocks just bump along the bottom and are not really doing very much. They just go sideways. And the way that we look at timing and supports and resistance, what happens is what was resistance flips to support. And we just wait for that to happen. We're already following the stocks normally for a considerable amount of time before that's going to happen. Which means that we get used to their price action, etc., etc. And right at the bottom is apparel and clothing, 197. So it's finally reached the bottom. It was 194 last week. And there's some big names in there. So this actually was sector number 1 about 18 months ago, which just highlights this sort of endless merry-go-round of pass the parcel, as I call it. And just to give you some names of some stocks that are in there, VFC, Coach, COH, which I talked about last week. Their results came out. They beat a little bit. It hasn't broken out yet. It did rally on its results. So we're keeping a close eye on that one. Under Armour, which is probably well known by everybody, UA, that's been on its knees. HBI, which is Hannah's brand, which I think is Tommy Hilfiger, might be wrong there. PVH, which I think that might be Tommy Hilfiger actually. Michael Kors, Ralph Lauren, GII is a big one. And then also, not actually in that group, but in the same sort of area, we have like training shoes. So things like Foot Locker, FL, Nike, NKE, they're all in this area. So this particular sector, I'm now scanning the vast majority of them, looking at the charts and waiting for something to happen. The other ones at the bottom, probably to do with hangover from Trump as well, is to do with medical generic drugs, drug suppliers, retailers, retail drugstores. They're all on their knees. I'm assuming they're thinking that Trump's going to cut down royalty payments and try and make drugs cheaper. So there are the two areas that I'm really interested in. Just one other thing, just on the fundamentals of why financials were very strong on payroll. What you're looking for there, I don't really care too much about statistics and economic statistics because the market will do whatever it wants to do. But just a little bit of background on Friday. The payroll number was a little bit better than expected. So I think it was about 20,000 more jobs created. However, I always look at the revisions of the previous months, and they always give you revisions. In this case, would have been for November and October. And they were revised down, I think, about 35,000. So effectively, the number came in as expected. You know, we were a little bit higher in the short term, but we've given some back further down. The thing that the market focused on was the wages growth, which was down. So I think it was down 0.2, which is a tiny amount, really. And this was a great example of the way that the market will spin numbers, however it wants to do. So what that means is, obviously, if companies are not paying so many wages, then they make more profits. And so the stock market went up. Now, I'm probably going to do something during the week, which I'll just go through payroll results over the last 2-3 years. And I can tell you now, 9 times out of 10, if payroll misses, stock market goes up. If payroll beats, the stock market goes up. Yeah, doesn't really matter. Yeah.
Probably worth explaining what payroll is to anyone. Yeah.
Payroll is it's the first Friday of every month in America. It just tells you how many jobs have been created or lost in the previous month. So it's the biggest single statistic. The reason I follow it is because I have no choice, because it's always the first Friday of the month unless there's a public holiday, so I can't avoid it. I wish they sort of randomized the day that it came out, and then it could quite happily come out and I wouldn't really care about it. But as it is that one number, then I sort of feel duty bound that I should at least have an idea what it does. But the reality is it doesn't really matter what the number is. The stock market in a bull market will rationalize it, and the stock market goes up, and that's exactly what it did on Friday. Normally, if you get an opportunity, sometimes the stock market will knee jerk down on the number, or the futures market will, before the cash market opens, because the number comes out an hour before, and that's normally a buying opportunity. At some point that will change, but I'd have to see probably 2 or 3 reports that did the opposite of what it's been doing for the last 3 or 4 years at least, before I believe that. So payroll is normally bullish for the market. The reason why financials were so strong was not actually really to do with payroll. It's to do with something called Dodd-Franks. Now, this was a law that was brought in after the credit crunch, and what it did was create very specific laws about what banks A could speculate in, and B the amount they could speculate in, and C the amount of inventory or actual residual of whatever it was they could actually hold. Now, it seemed like a very good idea at the time. It served its purpose to a certain extent, and there's no doubt that irrational speculation by banks contributed to the credit crunch. It wasn't, I don't think it was the main reason, but it didn't help, that's for sure. I think I always remember that when the whole thing was going a little bit mad, when they created what's called a credit default swap market for Saudi Arabia. Now, obviously, credit default means that you've borrowed some money and there's a risk of you defaulting on it, so they create a market on it. And I thought to myself at the time, this was before the credit crunch, and I thought, well, hold on, surely Saudi Arabia hasn't got any debt. They've got loads of money and there's, you know, awash with oil. And lo and behold, I went and did the research, and no, they didn't have any debt. So they'd actually created a market out of something that didn't exist. And that's when you see things like that, that always rings some severe alarm bells that the whole thing's gone a bit crazy. But the unintended consequence of Dodd-Franks was that it restricted the amount of what's called cash bonds, so government treasury bonds. So that could be 30-year debt from the government, 10-year, whatever it was. It severely restricted the amount that they could hold, which meant that it restricted the amount that they could make markets in or could speculate in, etc., etc. And this is really in combination with central banks buying their own debt, so quantitative easing, buying vast amounts of this, has created a government debt market pretty much worldwide, which is dysfunctional and liable to crashes or spikes, because there simply isn't the liquidity. There isn't enough residual market makers within the banking system to create a smooth working. And we've had 2 or 3 major instances where bond markets have either collapsed briefly or spiked briefly over the last few years. And what Trump has done is he's going through the process of repealing Dodd-Franks, which will free up the banks to trade, have more ability to trade these things. And of course, if they have more ability to trade these things, then in theory they're going to make more money. So the likes of the JP Morgans and Goldman Sachs and all this, well, it's Christmas and birthdays, and that's really what's got those financials going again. So financials is a loved sector, and they now had another external unexpected boost. So again, financials are on our watch list, but we're going to have to watch them closely and see whether they truly get any benefit from this. In theory, they should, but we'll be watching it.
So what would be some of the prime candidates? Would that be all the banks? So like JP Morgan, Goldman Sachs?
Yeah, the big banks, the ones that are, you know, what they call, they're official market makers for government debt. It's all the big boys: Citibank, Goldman's, JP Morgan, Wells Fargo, international banks, you know, Barclays, HSBC. It's worldwide. So there's about 25 of them that are primary market makers, and so they're the main beneficiaries. But it'll probably filter down to the medium-term banks as well. So they've already been on our scanning list every day. And actually, it might be worth calling up HBAN.
Yeah, I just called up JP Morgan there. Okay.
Okay, so JP Morgan, you just see there, it's sort of got a gap higher, on Friday, so it's come up towards our final resistance again. You do something like HBAN, then what that has done is its results came out the week before, and it gapped higher. Our clients had already exited that position because it hadn't developed enough ahead of the results. Drifted back down again, couldn't sustain itself, and then as you can see, it went up on Friday, but nowhere near as much as something like JP Morgan, because it's more of a regional bank. It's not such a beneficiary of this Dodd-Frank. Might be worth looking at Goldman Sachs, GS, see what they did.
Look probably the same, I think.
They're probably all going to exactly the same. So from our point of view, this is actually very interesting because a lot of these stocks, they were very loved. You see that buy signal in November, and when Trump got elected, where we broke out, rallied, given us a couple of exits. And then by the time it got to number one sector, there was nothing left for people to buy. So even though Goldman Sachs actually beat their results massively, I think the stock actually went down that day, that big down day just before the number one appeared, was their results day. So they had what's called good news, bad action, because everyone was already long, no one left to buy. Now they've got a boost from Mr. Trump, and now we're going to come up to those resistances, and then we're going to see what's going to happen. So sell signals that appear on any of these stocks at those resistances will be something that will be actionable. We might get more than one on the same day, and then I'll do some other analysis that attempts to work out which ones are the best ones to do. So it's setting itself up nicely.
Very good. Well, I guess at this point we might just flick over and run through the major markets and just update everyone with where we see them. So I'm just going to revert back to CQG, which is a different program. And look, the only reason why we often refer back to this is because CQG it's a great program. Sorry, not CQG. It's ChartIQ is a great program. It's free. That's why we're working with them. CQG is a professional program. It has a lot of data history, and that's why we often refer back to it, because we have access to a lot more data. But like Shaun mentioned, pretty much everything that we cover in CQG is also available in ChartIQ, which is the program that you can purchase. And in fact, if you were a CQG user, then we would be able to provide the same studies that we use. So we might just start with the pound. We got a sell signal on Friday, which is that little black dot. Interesting. The range deviation analysis basically supported that sell because the relationship between different time frames got overextended at the monthly to quarterly level. So that pullback's not unexpected. However, there's not enough information yet to identify that this uptrend is over, but there is some warning signs from the higher time frames that we may well be going lower next week. So really for me, I'd be looking to have a confirmation of this sell signal next week with a move under one of the lower weekly pivots that we out each week, and those pivots are available in here. So if I go to the pound US dollar, and I add in range deviation pivots, and I change that weekly. Okay, so in the next week we're trading under 123.38, then you can guarantee that this probably market has turned down on a longer term basis. Right now we can't say that, but yeah. Shaun, what do you reckon?
Well, it got overextended. You know, it hit that. I think it was a monthly level, was it, or was it the weekly? Yeah, that blue line pretty much touched it perfectly. That blue dash line. So it was a little bit overextended. The move to that level was caused by the Bank of England. Carney was talking and was dovish. Surprise, surprise. He has to be, because he said that the whole UK economy was going to collapse if we voted for Brexit. And of course, actually, the economy has been roaring ahead, so he looks a bit silly. But he has to sort of stay dovish regardless. So that's why the pound went back down again. Don't really care about that particularly, but yeah, for me, the major trend has changed. Those buy signals right on that blue line at the bottom, which we had a few weeks ago, which was lovely. We had pound Canada very close to a major level as well. So at this stage, it's purely a corrective move on pound. It seems as though it's subject to Brexit. People keep on trying to take the government to court and all sorts of things, which is a bit frustrating. I can see myself getting as bored with Brexit as I did with the credit crunch. It's already been going on for 7-8 months, and it's getting pretty tedious. But we should. The UK government is meant to do the formal exit process, I think, sometime in March. So we've probably got a fair bit of nonsense going on between now and then. But so far, just a corrective move. It was enough for me to head for the exit on the pound long positions, but I'm not short. Not interested in getting short. And that's partly to do with the dollar index. You might want to look at that one next, which had a choppy week. It's sort of still hanging in there, isn't there? You can see that it went below that blue line. We had a black square sell, and this is a very good example of it's not a black box system. It's what we call a grey box, in that you had that black square sell signal on the Tuesday, but it was right into that major support point, that blue line. So there's no way that we're interested in getting short, because it's coming into a major support point. We popped below it on Thursday, but we didn't close below it. We closed back up again. And then on Friday on payroll, we've spiked into the black line, pretty much to the tick. And then the low was also the blue line. So it's really seriously, a day trader's heaven. Sell the resistance, buy the support. But from a strategic point of view, a bit of a mess. So we're trapped. We've got that trend line below, which is a fair way down. I think for me, we've got to close below around the 98 even level. Then you would say that the bull market for the time being is over. Dollar's been going up for quite a long time. In the short term, it's been correcting down this year. So the dollar is a mixed bag.
Yeah, for me, the only thing I'd add to that is when we look at the relationships between time, we're now seeing the month-to-quarter relationship a bit overextended on the downside. So now that we are at support, that kind of just tells me to be careful here. Don't fall in love with thinking that this is a sell, because the higher time frames are now warning me that this could turn at some stage. So buy signals from here would probably be a warning for me. But
yep.
This downtrend may start moving back the other way, actually.
Yeah, I mean, I'm more interested in buy. I mean, that's for sure. I'm not, as I said, not interested in selling it at all. It's a question of whether any buy signals appear. Might want to do the euro, which is strongly correlated with the dollar index. That's
showing the opposite. Getting overextended now on the upside.
Yep. So we went right to the that black line.
I was still thinking. Here we go.
Oh, it's just still doing it. Sorry. So that went a little bit below the black line support. Traded up a little bit. There's some really, really big levels above. I mean, that 109.22 is a major level. I put a note out on the professional client list saying that I'm very interested in getting involved. If it gets up there, I'd have price alerts on. If I was in front of my screen, I'd be super focused on looking to see whether I could take a short position up there on any sort of negativity if it got there. So that's definitely on my radar screen, that euro level.
I'm seeing the same thing here. This monthly first up pivot above the quarterly. It's just telling me that's a warning sign. You know, last Friday we couldn't close above the weekly upper pivot. It's a warning sign there as well. So it's got work to do, the euro, and I'm waiting for sells to appear now. Basically, there's no reason to think otherwise. But I agree with Shaun. Above this major resistance, and you have to think it's going to surprise a few people, to say the least. So next, the euro pound. Euro pound's well tracked really in the recent range. For me, the bias is still down. In the short term, looks like it was marginally overextended on the downside here, but really the bigger picture is overextended. So at the weekly level, the bias has been up, but at the sort of monthly and quarterly level, it's definitely still down. So this sell signal up here, really, you probably would have exited that by now because of this weekly close, but we are approaching the top of the channel again, so looking for sell signals. Sure.
Took that sell originally and I exited beginning of the week. Haven't got a position in it. Just waiting to see what happens. Ideally with the euro, one of the histories of the euro, one of the problems the euro has is that fundamentally or economically, or people who make comments on, it's negative, the euro. There's very little out there that says that the euro was a good idea or that Europe's doing well, and so there's always this inbuilt negativity for everyone wanting to sell the euro, because some of it's ideological, some of it's political, and a lot of it's economic as well. And you can look on that chart and you can see that there's times when the euro goes through the roof. Yeah, there's June last year went crazy. Then in October last year went crazy. Then we had a massive rally at the beginning of this year. Yeah. And this is just classic. Everyone's short. Everyone thinks the euro is doomed. And so there's always a big short position, and every now and then they get completely wiped out. And so from the point of view of trying to sell the euro, you just have to be really, really patient with it. And that's why I'm never interested in selling it when it's weak. I want it to get up to that 109.20 level, and then I'm interested in selling it. So when it's really strong, that's the time to get involved in it. Certainly never selling weakness, because it's a crowded trade. There's people that predict that the euro is going to be at 0.9 to the dollar, possibly even this year, which seems a long way away at the moment. When it first opened, just as a sideline, it used to be called the toilet currency, or the U-bend currency, because it had already gone down. And then that's what everyone called it when it started, and then it rallied all the way to 156 or something against the dollar, from 0.8 or 0.78. So yeah, just be careful with the euro. Never ever sell it when it's weak. Always look for it to go up, take everybody out, and then sell it.
Yeah, in terms of levels, the levels, I'm just coming back to the euro, the obvious levels are around this 109 area is a standout. So when the market gets overextended and we get to a resistance, that's a good combination to have a go, and we'll let people know when that happens. Next, we might have a look at the yen. There's the Japanese yen futures, or the inverse of dollar yen. Immediate comments are, well, it's interesting, the yen, because we closed last month higher. We closed above the monthly pivot, and yet the monthly pivot's overextended. So there's a fair bit of noise with the yen, and at the same time we're at the top of the channel. So I've got to think it's got a bullish bias, but at the same time we're banging into a high time frame trend line. So I guess the close above here for me would let me know that I'm wrong in thinking that it might be a bit overextended, but as of today, there's no sell signals appearing. So I'm kind of like the fact that we closed last month high is telling me, well, it's not as weak as you think. So be careful. Shaun, anything on the end?
No, not really. It's pretty. I'm still 50% hedged on my long-standing position I've had since October, November. So not much to say on that one. Aussie dollars trying to break up. We talked the month before about stopping at the 3rd up on the monthly, which was 2 up on the quarterly, and it stopped, and then has rallied at the end of the week. It's coming into another big level, isn't it? It didn't quite.
It's extremely overbought to me, mate. I mean, there's 2 monthly pivots above this quarterly pivot. That is very, very rare. So watching very, very closely there for a reversal. It's interesting that, it's an unusual overextended state, to say the least. So, Shaun?
Yeah, I mean, the thing was said about the week before was it hit an extreme for the month, which was 3 up on the monthly range deviation, and it pretty much went there to the tick. I got involved. The market went sideways to down a little bit, so took a little bit out of it. But then it's, the retracement down was pretty shallow, in all honesty. And now we're breaking up into another extreme, so it's pretty tricky to trade. I headed for the hills on Thursday and took my medicine and got out on the balance. But there's still some big levels up there above. I'm not sure. I don't follow the fundamental statistics of Australia, so I don't know. The Aussie quite often moves on whatever the the Federal Bank of Australia says, doesn't it? But I don't know whether there's anything coming out there. But it's overextended.
It's really overextended. I reckon that 77 zone for me is where we just put up that resistance here, 77, 71. Monthly is over the quarterly, so yeah. Be patient for a sell at resistance.
Yep.
So resistance, for those people that are new, resistance would be what this red line is reflecting. At this point, the market will have difficulty getting through this level, as it has on numerous occasions through the year. And the combination of the market being overextended between different time frames. I won't go into it now, but all those little lines show me the relationship between time, and what it's saying is that there's a few higher time frames starting to flash lights saying the Aussie dollar is getting overcooked. So we're nearly at resistance, 77.70. So a sell up there for me would be a risk I would take. Next, we might move into metals. Actually, I'll go to sugar. Sugar's interesting because that's that took out the yearly upper pivot last year, which was a bullish sign, and has been sideways all week, and then closed the week. Effectively the last month, it's been in a range-bound condition, and now has closed in the last week above that. So pretty bullish. All of a sudden, Shaun.
Yes, on the professional client list, you can see there was that sell on Thursday again, straight into support. So we weren't interested in it. And then actually, it was a power play buy on Friday, which is extremely rare on futures. So you'd see that in chart IQ. Because of my background in commodities, when I first started trading, of course, there was no technical analysis apart from a 200-day moving average. And if we're really technical, 50 as well. So, which means that all you had was price action. So what came through as people shouted down, what was people doing on the floor, and fundamentals. So my background information of fundamentals of softs and commodities is unfortunately extensive, and it's very difficult. Even getting older, I have this inability to forget things. I wish I could forget a lot of the knowledge I know about it, but the bottom line is that the fundamentals of sugar are actually pretty bullish. I won't go into too much detail. The Indian crop has been poor the last couple of years. They're a massive producer of sugar and consumer of sugar. They put sugar in their tea and everything, and they eat vast amounts of it. And there's talk that they could be a net importer of sugar. They're normally an exporter, but they could be an importer. They could lower the tariffs. There's a lot of tariffs that India has on various things to try and, I don't know, the government likes to do that sort of stuff over there. So for me, the fundamentals of sugar are bullish. We're heading for the 3rd year of a production deficit, I think. Brazil is the massive market in sugar. It's not really the right time of year for things to be happening there particularly, but certainly fundamentally you can see it being bullish. Just a little bit of a weird thing on sugar is that because of the seasonality of crops, it sort of trades a March future, a May future, and then it goes all the way to October. There's nothing in between. So you can get a very, very big difference between what the May price of sugar is and the October price of sugar. So just be a little bit careful. I'm happy to go through with people some of the things about sugar. I'm actually going to take a look at some sugar related or sensitive stocks. They're probably drifting around the world. I'll have to do a bit of research to find out which ones have got the biggest correlation to it. So there could be some stock opportunities in sugar as well. But from a futures point of view, pretty positive. I'll just have a quick look on my chart because I did put a note out on Friday. So a quick look at what I've got. I think there's nothing until 24.10, so we're trading at 21.35, so 270 points worth of upside, and then it will make a decision there. So sugar, I'll have a look at some stocks, put some stuff out for our member site, and start monitoring them.
Yeah, and I just wanted to show people what I was talking about with the interrelationship between time. So these orange ones, they're the yearly pivots, up and down. So if we close above them, so this is like the end of 2016, we're above that upper orange line. So that's like a bullish signal for sugar. And right now, all the different colours reflect different time frames, but the yellows are like weekly levels, and you could see through here the last month the market could just never go through the lower yellow lines, which is the weekly lower level. So telling me the market's strong, and on an annual level it's strong. So the fact that we've gone through a whole month and not being able to take out these lower yellow lines, which are weekly levels, and we've got an annual bullish indication. This has got me pretty excited about what's ahead. But I'll leave that there. We'll go flick over to gold now. Gold, we made the point last week. Gold closed neutral last year. Was in an oversold position, rallied up on for the year last year as a corrective move. Right now, we closed the month at the monthly level bullish. So last week we had a sympathy move higher. If you step back from the monthly level, however, into the quarterly and yearly time frames, there are still signs of weakness there. For gold, we never closed 2016 above the upper pivot, so that's a warning. It hasn't turned the corner. The quarterly levels are still showing a bearish bias. So right now we are in a slightly overextended state for gold. So I'm very wary about holding any longs just by virtue of the fact that the quarterly and yearly levels haven't given me strong signals yet. So I am actually looking for sell signals to appear around that sort of 1250 level and lower. Typically big moves come in the middle of whatever time period it is that you're trading. So often it's the middle of the month or the middle of the quarter or the middle of the year. So I'll be looking for the middle of Feb, see what moves might appear on the sell side. But right now, I'm kind of indifferent really when I balance out the monthly with the quarterly time frame. So, Shaun, have you got any thoughts there? And we're obviously at the top of the channel here as well. So there's a few things coming into play, and obviously the major level is 1249 for where you might look to get short.
No, nothing from me. I think you said it all there.
Okay, next let's move on to equities. We might start with the Dow. Shaun mentioned we had an inside week. This is a weekly chart of the Dow. I'll just get rid of some of this stuff. So main takeaway here is that we are trapped up against our trend line from the recent high. In fact, we had an inside week. So for me, when I look at this, I'd add back the relationship between time. Like we closed last year mega bullish. When we had annual buy signals, semi-annual buys, quarterly buys. So long term, that's just confirming in my mind that equities will fly. However, right now, it's still prone for weakness to me, frankly. Just because we had a late rally on Friday, I don't frankly have enough evidence to tell me to get short nor get long. In fact, I mean, I personally emptied my long once we got up here. I am looking to buy because of the long-term signals, but I'm very wary. Unless we can close into this new high, I'm very wary about getting long personally. Shaun, what are your thoughts?
Well, on the market itself, we had a time continuation buy on the E-mini and the Dow, but obviously
at the daily level.
Yeah, on payroll, but it hasn't made new highs. So time continuation buys are positive signals because the trend is already up. But we've got to get over those resistances ready to confirm it. So there's a little bit of work to be done there. With the American market, when you analyze sectors and all those sort of things, the thing that I'm always interested in is to say, well, there's always one or two sectors that drive the rally, and then they go sideways like financials have over the last few weeks, and then something else has to take over. And the thing that was taking over is a little bit oil and gas, which we already said earlier. Computer data storage, I mean, is that going to drive a market higher? It's not really a big enough sector to do that. So I'm actually looking to see what is the next thing that can happen, which is why those financial stocks are critical for me. So there was a unexpected news event that is enough to propel those stocks higher, but they're all coming into big resistances. So the thing to get me bullish of the overall market is to see the financials overcome those resistances individually, or some of them, and start to propel it higher. Or we could get oil breaking up. Yeah, oil's not really doing anything. So if Mr. Trump did some sanction against Iran, I think on Thursday or Friday or something. I mean, he's a man who loves his Twitter, doesn't he? So so that didn't really get oil going. You know, and on another time, a story like that could have made oil go up $2, and it didn't really do anything. So I'm watching oil very closely, because if oil was to break up, then that could propel oil and gas to lead the market higher. So really about sectors for me. There is a bullish bias in the short term, but it's got some levels to get over. And I'm watching those sectors really closely. Also the ones at the bottom, maybe the ones at the bottom can take over. So things like Nike, there's some pretty big stocks in those sectors that are at the bottom, and they could take over. So it's not just about the ones that are hovering, let's say at sector number 10 to 20, that can suddenly go to 1 to 5. It's also the ones at the bottom can suddenly become, fashionable again. So watching the sectors to see whether we can get another leg higher. But the trend is up. The major trend is up. I mean, really, my ideal scenario is we get some sort of decent pullback that you can look to get involved in. It's always very difficult. I have an inbuilt aversion to buying strength or selling weakness in just about anything. Always, as a professional trader, you're always trying to, your price location is really what you're after, and Disney is a great example of that. You know, I think we've showed Disney, you know, be a little bit patient with it, and there's always opportunities. It came back to the level and provided a really sort of low risk entry point, which makes a huge difference. You know, there's and that's really, when it comes to the overall indexes, that's your ideal scenario. Yeah, really, last year there was only one major buy opportunity, and that was in February last year for the whole year. It was tremendous, but there was only one of them. So just watching the sectors, basically.
Now there's the German index, the DAX, has a similar shape to the Dow. Same story, really. We're caught in a sideways range that the market needs to close above or below to get the next leg. If I flick over to the Aussie market, I haven't looked at this for a while. That's trading neutral effectively. Closed the year strongly, so the overall bias, I think, for the Aussie market's high, but it's trading neutral at the moment. It's that support. Looks like it closed under that sort of 55-50 area. Might see it drift a bit lower. But for me, longer term, still in a bullish bias. Where do we go next? I was looking at wheat, Shaun. That looked interesting. Starting to get a couple of bumps on my head.
I haven't looked at wheat. I haven't had a signal at all.
Yeah.
You need to do. I must admit, I haven't had a signal in wheat in ages. Remember, we had the negative signal at the beginning of last year, didn't we?
Yeah.
And that was a good trade through the year. Sometimes when that happens and you have something that's been a big trade, psychologically I tend to switch off from it the following year and say, well, I don't really want to go anywhere near it. Oil is not one of my natural markets. I tend to avoid that generally, and because of the way it was set up, I've had to go away from my natural aversion to it and start watching it closely.
We might do more of a special on some of the grains next week. Then I've done a bit more homework.
Well, yes, grains generally. Bean oil was negative. Soy meal was negative. Soybeans are negative. They might do something on them next week, because I did the macro report at the beginning of the year or the end of last year. Beans and meal went perfectly to their upside limits and stopped stone dead and have retreated back down. I'm short beans, meal, bean oil, and corn. Corn also went to its level to the tick at 371. So yeah, we might do a bit on grains. There's oil. I suppose instinct tells me when I look at that chart. One of the things you can't teach is experience. Unfortunately, there's just no, it's just impossible. But I sort of look at that chart, and it looks quiet. But I can tell you now, from the lows from November, the point of most time within this uptrend is very much at the top. Yeah. It's probably around 53, I'd say 53, 53.12. There we go. Yeah. And so what that means to me is that the market is accepting a higher value. When you think about whether something trends up or trends down or does something, the reason why something trends up is because the people within it decide that the price is cheap, and so they're prepared to pay a higher price for it, and that's what drives it higher. And obviously the opposite when something falls. And so every time, normally last year, when oil sort of went up into the low 50s, it never spent very much time there, and then it would retreat back down again. So if you scroll back a little bit, you'll sort of see that. So, we'd go up, and then it would retreat all the way back down again, then we go back up again, ebbed and flowed, yeah, from the lows at the beginning of the year, yeah. But look, actually, that shows a much better picture, actually. So you can see where through the second half of last year, it always retreated. And now what we're doing is we're holding a higher value, aren't we? Now that is an acceptance of a higher value. And by default, no rocket science here, that's bullish. We're not doing a great deal at the moment, but it's sort of storing up energy. The best case scenario is we retreat back down to around 50, 71 it is, I think, that monthly level. That's Christmas and birthday, so has a bit of a washout, comes down to a major support point, and then we get some sort of signal to buy. So that's the ideal scenario. The other scenario is we just break up, and because we're accepting that higher value, it means that it's got energy to rally substantially. I think I wrote end of year report, I think I had 64 as a level. I mean, I had something crazy like 91 as an ultimate destination. It might take more than a year to get there, but you never know with oil. All sorts of things can happen. Had a very distant targets for oil, but increasingly getting bullish. I'll actually put a note out for the clients this week looking at that, just to give the exact levels that we're looking for. In terms of stocks, a little bit tricky. Shell is something that's already happened. CVRR was another one from the week before. Looks like I'm going to have to do some more work on individual stocks to see whether there's some that can take advantage of. If we get a breakout on oil, just another note for people is it's a bit of a cliche, but it's true. You buy the strongest and you sell the weakest. So if we do break out on oil, I am not going to be looking for the weakest oil stocks. I'm going to be looking for the strongest ones. It means my volume is less because my risk is going to be greater in all probability, but I want to buy the strongest ones. So the ones that have been performing well in a market that's not really been doing a great deal is the ones that I'm interested in, and I can probably just quickly tell you. I can easily tell you quickly which ones they are, because we've got number one of number one, and I just call that up. And there we go. I've never heard of any of them. Boy, oil royalty trust companies. I have Chesapeake, which I think had some problems. Actually, that's very interesting. Just looking at that, it's the number one sector, but I was just looking at their market cap, and they're obviously like royalty companies, so they probably have stakes in other things. So their market caps are actually ridiculously low. The top one is only 600 million, and there's 18 stocks there. The bottom 9 have less than 100 million market cap, so we can completely ignore that sector. If I went to oil and gas drilling, which is currently sector number 8, yes, I'm going to get a few more that I've heard of. So if you call up RIG, R-I-G, just in technician, and I've got a feeling there might have been a buy. Right, now we came down to support. There we go. So RIG is it's come off, as you can see, and it's coming into its nearest supports with those lines. We're also on the study below, coming into towards some annual levels and semi-annual, so there's a decent support there, and that is the sort of stock that I would be interested in. Another one, just quickly, if you do HP, so let's see what that one's doing. Right, they've all done the same thing. There we go. Right. Almost identical chart. The study below, the support's a little bit further away. So they've actually not done very well, have they, last week?
Interesting.
But coming down into support. Just on the final sector, we'll do oil and gas field services, which is still number sector 15. Well, Halliburton, one of my favorites, HAL. And you've also got KEG, which was something I looked at this week. Yeah, I remember HAL down at 30. Right, so HAL's just still doing really well. Key, as in key to the door.
Sorry.
Did you do KEE? KEY? Okay, going sideways. Yep. So that's one that's storing up energy, isn't it? And I'd be interested in the breakout there, I think. Weak manager. So a few things on oil and gas there. We've gone a lot longer than we should have done. But, just
Yeah. Well,
anything we need to wrap up on?
yeah. Are there any questions for people?
Let me just check. I don't think so. Yep.
Yeah. Okay. So look, in terms of levels for oil, they close above the high here at 55. What is that level? 55.24. End the week above that, then outright bullish. Market's making value higher. Looks good. Been no weakness for the last 6 to 8 weeks. So no reason to change our view there. So yeah, I guess we'll wrap it up there. If you want to get involved, once again, tradingsafely.com.au. All contact details are in there. Feel free to give us a call. And to our clients, we'll see you on the community site this week, and hopefully equities can break out of the range, and we start to get a little bit more happening. It's been fairly quiet for obvious reasons, but I think that's about to all change. So, Shaun, over to you for last words.
Yep, I think oil is one to watch, isn't it? Coming into the week, see whether equities can maintain that breakout, if they can do it. But if something's going to drive it and make the market have a new leg higher, it looks like it's going to be oil. Do not underestimate the size of the number of stocks that are in oil. So a bit like financials, there's some big stocks in there, big caps. They can drive a market. I was talking about what I thought could drive the market, and it's no doubt that oil is easily big enough to propel all of the indexes higher. I think just the last thing, God, we forgot. It's weird how I thought it was going to be short this week, and then suddenly I start talking, and I'm still talking an hour later. But do you want to just quickly do Amazon, Google?
Yeah, sure.
Because they're important. Let's just do Amazon. Right, so Amazon, we talked about that final resistance, at 839, 849 was it, or 847, something like that. So that's a big barrier for it. It's actually broken its nearest support. So if I'm talking about what's going to drive the market higher, it doesn't really look like tech. It's got some resistance that it's got to get over, and this is a great example of a crowded trade. The powers that be, or the popular commentators, been pumping Amazon and Google and Apple and all these sorts of things for ahead of their earnings, and then of course their earnings come out, and it's debatable whether they would have gone up even if they'd have beat or matched it. But of course everyone's long, and so they all take a hit in the short term. So the NASDAQ and everything's going to drive anything higher, then Amazon's got to get over that 850. And then on Google, I think it's 839 off the top of my head. So if you just do GOOGL, there we go. So we can see we had a breakout ahead of the earnings, which we're not interested in. We didn't get a signal anyway, but and then it's gone back below that level. So I think it's around sure exact level, around 820, something like that. So that's got to recapture value back above there to do that. And if you do Apple,
so on Google, you're waiting for a buy, Shaun, or?
I know nothing about Google. They're so big and complicated. I've got no idea what they do. So I don't. I try and avoid it. I suppose if I got a signal, I think there's easier things to trade. You know, when you talk about sector rotations and things like that, I never really know.
We're at the top of the
Google,
range.
yeah, I mean, I look at Google, and purely because it's so big that it influences the market. So I'm interested in it technically, but I'm not necessarily interested in trading it. It's a tricky one for me. If you do Facebook, obviously their results came out, and
Yeah, I mean, Google. It would have been nice for Google to be a bit like Disney, frankly, if it had broken out and then held this.
yeah, exactly.
And then given a buy signal, then yeah, okay, I would have felt pretty good about it. But the fact that it snapped back under is frankly a bit concerning.
Yeah, exactly. It was Facebook had its results a bit overshadowed by a lawsuit, and there you go. It's failed at the final resistance. I think we had a sell signal, didn't we? So,
yeah, right on time with the $500 million fine they got. But I'm sure that's
that had something to do with it. So tech not going to lead it higher, is it? It's going to have to do some spectacular things, that's for sure. Which seems like at the moment. So the takeaway is oil and gas.
Yeah, what's the next sector to grab the ball and drag it higher?
Yep, oil and gas. I think there's much doubt about that one.
And look, you know, if you want to just get involved in this inner circle, we've got access to this inner circle. There's a monthly membership for $39. We've kept it pretty low, but there's a lot of information in here, and we would encourage people to get involved if they want to keep up to date with global markets. And once again, reach out to us on the website at www.tradingsafely.com.au if you would like to do that. So for now, I think we're just going to wrap it up there. Thanks very much for your time. We actually went well over what we're expecting to. I said to Shaun tonight I was trying to keep half an hour to 45, and it's been an hour and a bit already, so sorry about that. But I think the fact that we're still talking means that our minds are actively engaged with the market. But let's leave it there. So everyone have a great trading week, and look forward to seeing you next weekend.
Okay, bye-bye, everyone.
Thanks, Shaun.
Yeah, got that.